We need it. Listen to a couple of young dads talking about how we need rain. 10 years ago.
Well, I've been trying to get my yard aerated for like the
There you
last
go.
overseeded and aerated for like the last, I don't know, probably 3 or 4 weeks, but the guy keeps coming out and he's like, still too hard. He's like, I'm only gonna be able to get an inch into the ground. He's like, we need to really be more than that. So hopefully after this rain he'll be able to come out and get it done. But yeah, I know. I was like, I know I was complaining about it, and my wife's like, gosh, when did you go from, middle aged to 80-year-old and overnight? And I'm like, I care about my lawn and stuff like that. So it's funny. Yeah,
Uh,
it's
we do. Us dads do. Tell me the truth though. Do you have a pair of white New Balances?
uh okay, they're not the ones that you would think of. I do have New Balances that are all white though. They're a little more classy than
Then the Crispies?
yeah. A little more classy than the what do they call those? What's the brand? I know it's like New Balance, but there's like a certain, I guess, product line that's called. Those
Oh, I don't know.
dad New Balances or whatever. Yeah. Now I don't have a pair of those, thank God. If I do, I think my wife would really start questioning things. So
I mean, I got a buddy that's younger than me. I think he just turned, I think he's probably just 31, but right when he had a kid for the first time, that's what he got. He bought himself those shoes, man, to make it official that he's a new dad.
nope, not happening. Nope. I pride myself. I started coaching basketball this year for my daughter, and I was like, we might not be good. We might be good, but we might not be good. But I said the one thing we got going for us is I was like, I'll probably have the best shoe game of any coach uh, out there. So
I
I've got a
believe it,
decent
man.
little collection of Jordans that I have. So uh, no New Balances yet.
Okay. Well, that's cool, man. But hey, we're the reason I wanted to call you on is because the reason I wanted to call you on was because of obviously the big changes we've got going on in our industry. Um, it, I don't know if it's affected the real estate agents so much. It may have not affected you as the national media may make it seem. But obviously, like 6 months ago, people were closing at sub 3 interest rates. Now we're closing at around 7, right? I don't know. What is it today, Mr. Lender?
Yeah, so we had a pretty big drop in rates yesterday,
Did we?
back down into the sixes, where previously, weeks before we were up in the sevens, high sevens. So we're back down in the sixes again. So, very drastic drop. You can maybe blame, you can credit that to the election, maybe some stabilization in the markets,
Yeah,
maybe some feelings that inflation's finally probably peaked and we're starting to plateau on that front, which will definitely obviously help interest rates if we've seen, we can kind of see the light at the end of the tunnel as far as inflation goes.
right.
Um, but yeah, so we've had a pretty drastic drop. Obviously, still way higher than where we were at even in January or February this year. But any little drop is a good thing, as
Right.
far as clients, what they're going to get approved for. And then, obviously, helping that payment fit in their budget a little bit better.
Right.
Every quarter percent, eighth percent helps.
Yeah. So how has this changed your data? How has this changed it for you as a loan officer? What are you guys doing? The great loan officers. This is obviously Justin over at Ruoff Mortgage, right? Ruoff Mortgage.
Yes.
Um, how have things changed for you? What are you doing to adapt to these
It's
changes?
funny. Not a lot's changed. Other than when we were probably running 3 or 4 scenarios for clients. Now we're probably looking like, okay, what's the difference between this payment and this payment at 15% down rather than 10% down? So we're, rather than running 3 or 4 scenarios, we're probably going through, 6 to 8 with clients, different products, things like that. So that's really the only thing that's changed on that front. Now, as far as the customer goes, we've always done this in the past, but really educating, the customer on cleaning up their budget before they buy, right? So whether that's getting that, pesky credit card that's, got a balance on it, maybe paid off to free up some cash flow, because you're going to have a higher payment because of the interest rates. So really a lot of budget talk. Obviously we've had them before with clients, but it's obviously hurting it now, especially with the higher payments that they're going to have when they get into the house. So
Yeah.
I say on the customer front, that's probably the part that we've really started to dig in more. Because the last thing you want to, you don't want to, even if they'll get qualified for it, the last thing you want is them to be house poor, right? So if there's some cleaning up we can do,
Yeah.
educating them how they can do that, and what that's going to help, as far as debt to income, what that's going to help their budget, spread their budget out a little bit. So,
Right. So are the days of you calling past clients to refinance over?
for now, yeah.
Yeah.
You know, I've had a pretty good system for the last, and everybody should be doing this, but touching base with past clients.
Oh,
And it's funny,
absolutely.
I nowadays when I call them, they're like, I can't refinance. I'm like, no, I'm just, checking in, making sure, because here's the thing, even people that are already in houses are obviously worried about what's going to happen. Is my equity going to go up or down? How is that going to be
Right.
affected by the higher interest rates? So touching base with those people, while it might not be for a refinance anytime soon.
Yeah.
Especially the people that locked in over the last couple years are probably in the low threes, maybe even twos. But obviously helping educate them, still touching base and helping educate them on, what their equity is going to look like and how that's
Right.
going to be affected with these interest rates.
That, I mean, that's a sign. I mean, that it's in our industry, it's, a lot of people think that, oh, it's a transaction and it's over. Really, your clients for you, my clients for me, they're clients for life.
Yep.
We want to make sure we handle and take care of them well after the transaction takes place. Another sign of a good lender is getting somebody cleared to close in like 10 days, which you did for my buyer not too long ago. I'm pretty sure it was like 10 days.
Yeah. I think it was, it was like 9 or 10 days. And even, I think I
Yes.
even texted you. I was like, whoa, like, I was like, all right, like, I know, like, we're typically averaging about 15, 16 days, but, to see something coming in 9 days, you're like, well, that's a lot of peace of mind for somebody that, especially this client that was making a pretty big move from North Carolina. It's like the last thing she had to worry about for the last, waiting to close was, whether are we going to close or not, right? We were
Right.
already clear to close, kind of gave her that peace of mind. Um, but yeah, it definitely helps. It helps the client, they can worry about the small stuff like packing up and getting moved
Right.
rather than coming down to the finish line, on a 30-day contract and wondering if they're going to close or not. So,
Absolutely. Well, what else? So talk a little bit more about yourself. What makes you great? I know you're great, um, just from our previous experience, but talk a little bit more about how you're great and what makes Ruoff Mortgage the best in town.
yeah. So myself, I have a team here. I have an assistant named Devin who's unbelievable. Without her, I'm not me, right? So I always tell her like I'm the left brain and she's the right brain, and
Yeah.
they work perfectly together. That's the biggest thing as far as our team goes. We have a great aspect, and then like you said, when we close, it's not transactional, right? If you call me on a Tuesday night 6 months after your close, like I'm gonna answer the phone and answer your question.
Right.
We like to think, once you close with us, you're part of our family, and Ruoff is a family-owned company, so you're part of that larger family of anybody that's ever closed at Ruoff. Um, that's really what makes us different. Is a lot of loan officers and realtors, very transactional, and it's just not how we handle it here. You're going to have a lender for life, and whether that means you do another transaction or not, that doesn't matter. So that's the biggest thing when you go through Ruoff. Now, as far as Ruoff as a company, we've been around forever. We've been in Westchester, right here in Westchester,
Yeah.
coming up on our 5th year. And not planning on going anywhere. You see a lot of lenders come into town and kind of leave quickly. We've had the same 12 people in this office for the last 5 years, and hopefully retire from here
Yeah.
is the
Right.
plan. But again, it kind of goes back to our biggest thing too is, and then lastly, we get loans closed. There's no messing around. There's not all these hands in the pot. Typically, when you see things go sideways on a loan, you've got 30 different people doing 30 different things in a file, and it's just not the case. We're very streamlined here. you know, we got an LOA, a processor, underwriter, and that's
Right.
it. And so, talking about streamline, that's why when you look at it, on average, our clear to close is 15 days. That's why you're starting to see, things tick down. We're getting things closed in 8,
Yeah.
9, 10 days. And again, it's just that's not happening across the board. And, when you can give that customer that peace of mind of, the last 15 days of their transaction, they're just going to have to worry about packing up. That's a big, big, big ordeal for someone to be able to just be like, I don't have to worry about day 29. We don't have a clear to close. I don't have my wiring number or anything like that. So
Right.
that really differentiates us from, other people in our market for sure.
Absolutely. I got 3 more questions for you. One is, I've heard of some banks getting creative with the higher interest rates and saying, "Hey, listen, what we're going to do is offer you a free refinance once the rates lower." Is there truth to that? Is there only one bank who's all doing that? Is there truth to that?
Yeah, so yeah, and we actually just rolled out our loyalty refinance program. So if you lock with us now, your next transaction you can get up to $2,000 off closing costs, which our
Wow.
closing costs are, hair over $1,000. So you're going to be able to, offset some of those title fees that we still have on a a refi transaction. It seems like it's becoming more popular. We've kind of rolled it out, and it looks like, you have a handful of banks and other what we call non-bank lenders like myself, that are kind of rolling out something like that. And it just gives the customer peace of mind, like, look, okay, this is going to stink for the next year and a half, 2 years,
Yeah.
but at the very minimum, I'm not going to have to worry about paying lender cost again to get from a 7% down to a 5.5, and when I
Yes.
get back down there. So yeah, but there's definitely some truths to that, but I would definitely, if I was a customer, read the fine print, right? So,
Right.
you want to make sure that it's not like you're taking a higher interest rate to get those credits, that's actually the complete opposite of how ours works. As a customer, you're going to get premium pricing, which allows us to, cover those closing costs. So,
Gotcha. Okay. Then second to last question, if someone's really struggling with the interest rate, um, alternative products that may be out there besides a 30-year note that might be more attractive to me, maybe somebody just struggling with any of the dimensions of a 30-year note.
yeah. So, and the first thing that we kind of start out with when we're having that conversation of someone maybe like, hey, what else is out there? You know, we got to know what your goals are, right? So if
Right.
you're like, hey, this is my forever home, we're going to be here for, I got a 2-year-old, we're going to be here until they get out of high school. You know, the big thing with ARMs is, is it going to be a good idea to maybe do something like that if you're going to be in the home for 20 years? Because you are obviously assuming risk that if there isn't a refi run, in the next 5 years or 7 years, which seems like a low probability of that happening. But if there is, because there's always that risk,
Right.
a 3-1 arm or a 5-1 arm or a 7-1 arm or a 10-1 arm might not be the product for you. So obviously the big ones are arms. Those are obviously locked for, 3, 5, 7, or 10 years. And then after that, there's an adjustment period.
Right.
But you also get the benefit of a little bit lower rate than a, 30-year fixed on those arms for the time being, right?
Right.
But you got arms, and then you have 2-1 buy downs. A lot of people probably haven't, that are buying houses, say, your millennials and things like that. They probably have no idea what a 2-1 buy down is. So essentially what that is, you're going to get an incentive from the seller to temporarily buy down that rate. So if rates today, for example, are 7%, that first year you're going to be at 5%. That
Mhm.
second year you're going to be at 6%, and then that third year you're going to start paying the original principal and interest at 7%.
Right.
While those are good, obviously, again, you kind of assume the risk of, it's temporary, right? Like,
Right.
eventually, if there's no refi opportunity down the road, say within the next 3 years, you're going to be stuck in that higher interest rate, paying that payment. So you need to make sure that while you'll be saving money temporarily, that you're going to be okay with that payment. And then you also you have to qualify for that higher payment, even though you're going to have a lower payment in the beginning. So,
Right.
but that doesn't always mean you could qualify for it, but that doesn't always mean you're going to be able to feel comfortable with it, right? So, but those are the two main products that I guess outside a 30-year note. Now, if you're talking as far as 30-year notes, how you can kind of get, creative on those. What we've been seeing, obviously, with it kind of swinging the other way to a buyer's market, you see houses that are sitting for, 2, 3, 4 weeks at a time. Say a house is listed at 400,000 and you're like, well, we want to come in at 388. Well, getting the house at a cheaper price is not going to have the drastic effect on that payment that you may think it has, right?
Right.
$12,000 seems like a lot, but when you're talking over 30 years, it's not really going to have a drastic effect on that payment. So what we've been kind of instructing and that we've been done recently, I actually just did a Facebook post on it. We had a client get in contract where, offering that list price and then asking for seller paid, closing costs to help buy down the interest rates is going to have a larger effect on that payment rather than say getting the house for $12,000 less. So like the example that I just had the other day, they got in contract. They offered slightly under list price, but then they end up getting $8,000 in seller pays. They bought down the rate, 0.625% from where the rates were at, which ended up saving them, $130 rather than doing the opposite, right? Going for the lower purchase price, and getting those seller paid closing costs it drastically affected the payment. So a lot more than getting the house for cheaper.
Right.
And it's a natural thing, right? Like you're like, well, that doesn't make sense. Like, wouldn't I want it for $12,000 less? It's like, yeah, if you have no chance of getting seller paid closing costs, obviously, yeah, that makes a little more sense. But with the opportunity to kind of get creative and get seller paid closing costs and buy down that rate, it's going to have a drastically different, effect on that payment rather than just getting it at a lower price.
Gotcha. Okay. Last question. Someone offers me $1 million, right? And they're saying, listen, man, we're going to go to hole 17 at Wetherington, the par 3 where you got to hit across the lake. And they say, you got to pick the golfer and it's between you and Steve Newen. Who do I take?
Me.
Okay.
Yeah. Well, Steve got the best of me in a 2-man event at Hamilton Elks. What was that? 2 years ago. I blame it on my partner, but yeah, he got the best of me there. But I think I like my long irons a little more than Steve's.
Awesome, man. Dude, I appreciate you being gracious with your time. If people watching this want to know how to get a hold of you, how can they get a hold of you, Justin?
Yeah, so first place, we have a website, www.epurelendingteam.com, and that's spelled EPURE. You can also reach me at my phone number, which I only carry a cell phone. I don't have an office phone. That's 513-264-2578. And then if you're in the Westchester area, we're right next to Lakota West High School, right across from Kemba, right on Union Center Boulevard. So
awesome, man. Well, hey, dude, I appreciate you as always, and have a great weekend. Enjoy the bye week. Bengals, we know, won't lose this weekend. Heading down to the UC game though tonight. Hopefully, we can pull out a victory.
Yeah, heck yeah, that'll be good. It's a little rainy, but I'll be in Vegas in a couple days. So
nice.
Unfortunately, the Bengals aren't playing, so I can't bet on them. But it'll be nice to get away from this rainy weather for a couple days.
Absolutely, man. Have a great time and safe travels.
Thank you. Appreciate it.
All right, buddy. We'll see you.
See ya. Bye.